I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. The U.S. agricultural trade outlook is expected to improve slightly compared to the previous expectations amid an improved export outlook. The USDA's Economic Research Service released its quarterly update for the U.S. agricultural trade for the current fiscal year last week. According to the agency, U.S. agriculture exports for the fiscal year of 2026 that began on October 1st are forecast at $173 billion. That compares to the August forecast of $169 billion. Most of the jump this quarter was due to a $3 billion increase in agricultural exports to China. Expectations of an increase in the value of corn and soybean exports were also notable. Meanwhile, agricultural imports are forecast at $210 billion, down $500 million from the previous forecast. That increase came with higher shipments of beef and processed fruit. With imports mostly unchanged, the total ag balance is forecast at a $37 billion deficit compared to $41.5 billion predicted in August. U.S. trade finished the 2025 fiscal year with a trade deficit of $43.7 billion, the largest on record. The U.S. agricultural trade balance was positive for nearly 60 years before shifting to a deficit in 2019. The USDA's quarterly hogs and pigs report, released just before Christmas Day, ended up showing U.S. hog and pig supplies higher than expected. Key highlights from the report showed that the U.S. hog herd totaled 75.6 million head as of December 1st, up about 0.5% from a year ago. And that was also higher than the Bloomberg survey of analyst estimates that had expected a 1% decrease. The first surprise of the report was the number of market-ready hogs, which were much higher than anticipated. Hogs weighing over 180 pounds increased by 2.8% from the same quarter last year. And another surprise from the report was the farrowing numbers. Between September and November, the number of sows that had farrowed in the last quarter rose 0.3% versus an expected 2% decline. Farrowings for the next two quarters are expected to total 2.9 million head, up nearly 2%, with farrowings for the next two quarters matching that sentiment. Higher year-over-year farrowings come after producers have been trimming sow numbers and focusing on farrowing productivity. USDA livestock analyst Mike McConnell says the latest data suggests more pigs in the pipeline down the road.
So overall, what the report indicates is that heading into next year, those farrowings and the fact that we're seeing the intentions are to farrow more hogs in 2026, at least for the first half, that should result in relatively higher hog supplies relative to 2025.
McConnell says stronger producer margins could continue to support higher future farrowings. Brazilian farmers will be ramping up their soybean harvest efforts over the next couple of weeks, and adequate moisture conditions throughout much of the season have kept production estimates at lofty levels. Brazilian consultancy firm Agruol raised its 2025-26 soybean production estimate to 180.4 million metric tons, up from the previous forecast of 178.5 million and a record. Brazil's national supply company, or CONAB, had lowered its production forecast slightly this past month to 177.1 million metric tons, though total production is still expected to rise 3.3% from the previous season. The agency said crops have been developing under good conditions in most regions. Recorded rainfall in Mato Grosso and northern Goiás was more regular and increased soil moisture during the first half of December. Global soybean production is expected to decline this season despite the growth in South America. The USDA forecasts soybean output at 422.5 million metric tons, down about 1% from last year. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.